Good evening, everyone. Good morning, depending on where you are in the world. And thanks very much for joining this this webinar. I'd like to thank Africa Global Fund for hosting and organizing this. So we are here today for the African Technology Innovation Series, focusing on Southern Africa in this edition. During this hour, we intend to cover the breadth and depth of the opportunities within the region and the ability to scale these opportunities globally. Added to that, and for particular any interest from LPs, institutional investors that are listening and participating, how they would be able to obtain hard currency returns, how to get this from Southern Africa, and ultimately place this back in the hands of the investors, which is obviously the ultimate goal. And very importantly, we'll also address how COVID has accelerated the adoption of technology in Southern Africa. We're remiss not to address that as obviously it's going on everywhere and we're all been exposed to it. And then also how the world and how technology-based high growth businesses can solve real world problems and produce these outsized returns. So on our panel today, we have 3 high growth businesses that are competing internationally. They're working with large blue chip investors and other strategic partners, and they're paving their way through international markets. And then we have 2 venture capital investors from South Africa and a venture capital / private equity legal partner who bring vast professional and high growth experience and wisdom to the South African technology investment landscape. So I'll give a quick introduction. So firstly, I'm Rob Heath. I'm a recovering chartered accountant. I have experience in a variety of sectors across the globe in the US, UK, and Africa, both operationally as an executive in fundraising and startups, and for last year I'm a partner in HAVAIC. So I can't claim to be the youngest or the smartest person on this webinar, so it's good to get that out the way. And as an hour is probably not enough for a panel as we have here, I'm going to just start off with a few simple questions, and then we'll take a discussion on a more fluid path. There is a question box on the right, or your right-hand side. Just pop questions in there. I will do my best to bring them into the discussion. Failing that, we can get the panelists to answer these offline and after the webinar, and I will share my details with you, or you can contact me on LinkedIn. I might just pop my LinkedIn profile up there at the moment. So so what better way to start off the discussion than with 2 of our fantastic health tech businesses with successful serial entrepreneurs as CEOs. So we have Nic Klopper for hearX and Sheraan for RecoMed. And obviously, again, keeping it all current and topical. I'm going to pose the first question across to Sheraan. And could you please, Sheraan, to start the discussion, could you please discuss how the COVID pandemic has affected, RecoMed and the general environment in which you operate?
Thanks, and good day, everyone. Well, as Rob mentioned, I'm the founder of RecoMed, and RecoMed is an online healthcare booking platform and marketplace, the leading one in sub-Saharan Africa, with large market concentration in South Africa. Really, we allow healthcare providers to do 2 things. One is to enable online bookings for their practices, which is something their patients can do. So it's like booking.com for doctors. But the bigger part of our business is then to drive new patients through to these practices and help them grow their revenue. And we do that by connecting digital platforms into medical aids, large health insurers, life insurers, and other players in the healthcare ecosystem. So we enable online booking and we drive new patients through this channel. We've done a lot of work in the back end of the industry to integrate our platform with leading insurers and practice management organizations. Now, COVID came along, of course, March and February. In March, our company did record bookings because there was a massive demand to get flu shots, and we power the software for a lot of the nation's largest clinic groups. The second thing we found is an increase in demand as online bookings spiked because it increases social distancing and it decreases queues and waiting rooms where obviously infection can get spread. Then we released a telehealth platform built into the RecoMed platform, which got some very strong uptake because people now want to be treated from home where they don't even have to set foot in the doctor's office, whether they book or not. And finally, doctors have come under a lot of pressure. Any players in the healthcare sector, really, right up to hospitals, down to clinics, because people have decided to stay home because they're scared of getting infections. So healthcare professionals' revenue is down anywhere from 30 to 90% during the time of the pandemic. So they're very eager to both adopt technology now, and secondly, to find solutions that can grow their revenue. Overall, in telehealth in particular, I would say we've seen 5 to 10 years of behavioral change in 6 months, Rob.
Cool. Thanks very much, Sheraan. Yeah, I mean, knowing RecoMed well, I definitely is well positioned for that. I think just carrying on the health tech angle, the health tech theme there, I think Nic Klopper there, the hearX CEO, perhaps the next question to you is how have you seen the environment being permanently altered, under which you operate, and then for you as a business, has it changed anything which you believe will be on a permanent basis?
Thanks, Rob. Yeah, just quickly, Nic Klopper, CEO of hearX. Just to give a quick intro about what hearX is about. So we have two arms to our business. We've got a B2B side where we develop technologies for the traditional healthcare professional, either that be the audiologist or a general HCP. And then the new side of our business is a B2B play, providing remote hearing care solutions to people's homes. But Rob, to answer the question directly, it's been an interesting play for us. I mean, there was a survey that went out just when lockdown hit most of the local international markets. I think it was the second week of March, going to, I think it's a cohort of about 5,000 audiologists, and asked them, what would happen if lockdown was extended. At that stage, it was till end of May. 70% of them came back and said that their businesses will be closed down by the end of May should hard lockdown, happen. So, I mean, us as a business and being a startup, saw this gap when we already had products in the market. And I think what allowed, a nimble, agile startup like ourselves to, capitalize on something as terrible as COVID, right, was the ability to create a solution that can actually tailor for this market. So we created a technology called self-test kits to allow these audiologists, while their practices were closed, or specifically if you think about audiology and the typical patient coming into audiology practices, I mean, those are people of 65 and upwards. I mean, they're very high risk of leaving their home, so not really eager to go into a practice. So we allowed the audiologists to use our technology to courier these to people's homes. And then for them to be able to do all this remote testing at home, from having an ear exam with the AI otoscopy product that we have, to a full threshold audiogram that then gets sent back to them. They can program a hearing aid and send it out to people's homes. And I mean, we're fast forward 6 months, right? What we've seen taking place, a lot of the audiologists went back to their practices started reopening, a lot of the big box retailers started reopening, but our demand for such a product of remote teleaudiology remained, right? So what we've seen now is a lot of people saw that, these expensive brick and mortar stores, these expensive infrastructure that we had pre-COVID might not be as necessary as we think, right? Driving a lot of them into thinking about how to adopt digital change. I mean, we've had requests from people which, pre-COVID, we were trying to converse with these digital online plays and remote teleaudiology plays, for months, and they didn't want to bite. I mean, now they're at our doors. We've got pilots with most probably every second retailer in the US, looking to kind of get into these pilots, just kind of because COVID most probably, like Sheraan also said, fast forwarded the thinking on a lot of the ways in which, businesses go about doing their day-to-day tasks. Yeah, that's kind of in our context, Rob.
Yeah, and I think particularly being a very low touch product, which you can definitely well placed for that. So I'll But I know we're going to speak a bit later probably about the globalization, so I'll be interested to hear more about that in a while. So, let me move on to our first professional software. So we have Ian Lessem. He's the managing and founding partner of HAVAIC, an investment venture capital firm from Cape Town. So if you're in the area, always welcome to pop in. So Ian, how do you see the environment changing for investors in this kind of post-COVID period?
Thanks, Rob. Yeah, good day, everyone. So as Rob said, I'm one of the partners at HAVAIC, South African-based venture capital firm that invests in early-stage, high-growth technologies. But very importantly to us, we really focus on what we would call investing in real-world businesses and ones that can scale into international markets. And linking that to Rob's question around how has COVID affected the investor appetite, the investor universe, the demand and supply of credible opportunities. Whilst, Nic covered it, it's always a bit awkward to say this because it is a very challenging time for many, many people, but it has in many ways been really positive. I mean, as you said, Rob, this pandemic has, if anything, acted as a complete accelerant to the adoption of technology, both locally and internationally. And Sheraan covered it. You're looking at the medtech space, years of legislation was kind of promulgated and enacted within a very short space of time in order to cater for, let's say, this low-touch new world that we live in. And coming back to the theme around real-world businesses, I mean, it's great to have the panel that we have today. I mean, health tech, it's an absolute no-brainer in the current environment. So, at HAVAIC, it is one of our key themes, both pre and post-crisis. We're fortunate enough to have a really strong portfolio consisting of five health tech companies, and these businesses, including RecoMed and hearX, for various reasons, are performing, better than ever. So there are, of course, challenges, but within those challenges comes opportunities. I think if anything, being businesses that effectively services clients through technology, which really means you're a remote business, that's kind of become easier in the sense that friction points where one realizes, of course, for certain things you need that face-to-face physical touch type of interaction, but for other things like executing on an agreement or installing your software into a remote location, you actually can do these things without having met anyone. And that really allows for the scalability of technology, both locally and in international markets.
Thanks, Ian. I'm sure we'll touch more on that as we go through the hour. So again, if you have any questions, please just ping me up in the sidebar. And I think just to give some context as well, perhaps all the high growth businesses, startup entrepreneurs, just maybe drop your website of your business in the right hand side as well to give some context as well, if you desire to do so. So as an African venture capitalist myself, I'm fully aware that we are not Silicon Valley. We do not pretend to be, and I think to pursue that as an environment for Africa, despite many good efforts, I think it's probably a bit naive and misguided to set that as a type of environment that we'd like to create. I was watching something on Netflix the other day talking about how coaches manage to pull the best out of their teams by building off what they have available, and I think that's very much what we see in Africa and in Southern Africa. Just a little side fact there is that if South Africa was if South African's GDP is the same size as the American VC market on an annual basis. So to put that in context, I think if American VC were a country, it would be the largest economy in Africa. So I think that's why one of the reasons why we don't want to be Silicon Valley. But that all being said, there are certainly sectors where we can compete. And my next question is someone who has has come across from the aforementioned America. We have Zach George, who's an early stage investor and venture capital partner. He has invested into more African startups than I believe there are African countries, and there are about 54 countries, so it's quite a lot. Zach, you've walked a path which includes Wall Street, Stanford, very typical in Europe, American investment banker, yet you find yourself in Cape Town. Are there any areas or sectors where as an investor you believe Southern Africa has a competitive advantage? You may be on mute. No. No, well, we had you just now. Zach, you there? No, that's not coming through. Perhaps Ian, as the to save Zach, maybe we can get the hearing that mic sorted out. But Ian, do you want to just jump in there as well, if possible, just to maybe add some color there? Looking for sectors where we compete.
Yeah. So I mean, look, on a broad-based level, obviously operating in an emerging market, there are challenges. So we don't want to pretend otherwise. But the reality is, from an operational point of view, we remain incredibly efficient from a cost point of view. So I mean, we always joke when we're chatting to our investors in the UK, and we ask them where their offices are, and let's just say they're in Canary Wharf, and we ask them what their rent is, and we tell them what our rent is, and they kind of look at us and excuse my French, but as the Brits would say, are you taking the piss? And that kind of filters through. So one of the things most people on the session would be aware. I think, what is the stat, Rob? They say 40% when you're investing in a Silicon Valley startup, 40% of the funds goes towards the landlord. That's
something like that, if not more.
In South Africa, so that's kind of sets the scene, is to say, well, your base cost is just exponentially more efficient. So from the get-go, you need less money and less firepower to, let's say, enter markets. So that barrier from a cost point of view doesn't exist. But of course, as you said, we can't do everything. We can't be everything to everyone. But there are certain sectors, talking about South Africa or Southern Africa, which we absolutely have a right to play. I mean, those who have experience in this market will know from the financial services point of view. I mean, we've got absolutely world-class infrastructure and banks. I mean, simple example would be in the last 5 years, South African banks have won on 3 occasions the most innovative bank in the world award. It went twice to one bank and then another time to another bank. I mean, that's just absolutely phenomenal for an emerging market sitting at the tip of Africa to have won it 3 times in the last 5 years. It shows you that we certainly have these world-class skills in that sector. I mean, we've got a great panel of healthcare companies. I mean, we have a history of health innovation, dating back from the time it was like the medical equivalent of the space race, when Christian Barnard performed the first successful heart transplant down the road from us at Christian Barnard Hospital. Well, I think it was Groote Hospital at the time in Cape Town. I think it was in 1976 or 1978, something like that. So really, we have this history of innovation in the health sector, and that's filtered through to why so many health tech innovations are emerging. Of course, playing to the themes, Warren has been kept very quiet, so I don't know why you don't want Warren to talk, but I'm sure he'll talk soon. Warren, the CEO. He's running.
It's a quick one. Can you? Yeah. So can you guys hear me now? Sorry.
Yes. Go ahead. Yeah.
Okay. Yeah. Oh, sorry about that. Ian, thanks for stepping in audio for a second. Yeah. So just to Rob's point earlier, I mean, having spent a few years in Silicon Valley and coming to South Africa 10 years ago, the ecosystems are very different. And I think the way as a VC or an early stage investor you approach founders has to be different. So business models that tend to work in not just South Africa, but Africa as a whole, tend to be B2B or B2B2C business models, simply because the purchasing power of consumers is very limited, at least for now. And if you look at the cost of acquiring customers in Southern Africa versus the US or Europe, it tends to be a lot higher. But the one benefit you have is the lifetime values of customers tends to be a lot higher. So certain sectors like health tech, cybersecurity, big data, IoT plays in sub-Saharan Africa are very, very lucrative, simply because if you can form strategic partnerships with insurers, with banks, with big healthcare chains early on, your access to distribution provides a moat for you as a founder. So we're very bullish as investors in the health tech space, in the cybersecurity space, in the AI and IoT space. Financial services and logistics and mobility are all sort of natural extensions of that. So just as an investor across multiple asset classes in the VC space, I would say keep in mind how important your customer acquisition route is. And if you can solve that, then a lot of the returns that VCs look for are accessible in Southern Africa.
Great, thanks.
Can I maybe add in a comment to that question? And I suppose I'm coming from a slightly different vantage point in that I'm agnostic. I'm not an investor. I'm a service provider to the industry. So I see my perspective is to view an array of different players, both from the investors and the founders' companies as well. And I think if I think about kind of a competitive advantage, I mean, I think Ian used the phrase real world businesses earlier, and that's what I think he said was part of your investment thesis. And if I look at kind of the array of my clients that have performed well in this crisis, it really is those businesses that are providing, let's call them real world solutions. And if I think about the African thesis, a lot of what we're doing on the continent is trying to solve real problems. And I think it's not necessarily a competitive advantage, but I think that the types of investments that are coming out of South Africa, out of Africa, are really in that mold where they're solving real solutions and I think real problems, and I think that gives them a lot more resilience and credibility when you are in kind of an economic downturn.
Yeah, that's a great segue. Thanks, Josh. I mean, we're talking about real world solutions, and I think for those of you that know Southern Africa, there are some unfortunate competitive advantages that we have. One of them is health sometimes, and the other one would be security, and I think in personal security in particular. So bridging that gap of competitive advantage in Silicon Valley, I'm going to go no more introduction, and I'm going to let Warren Myers introduce himself. He's the CEO of and founder of Aura. And he's going to just give you a brief background as to how a company in South Africa powers security for one of the biggest Silicon Valley unicorns. Warren.
Thanks, Rob. Hi, everyone. The best for last. Joking. Yeah, I think just so Aura is a technology platform that enables anyone to access the closest vetted private security and medical responder to their location, anywhere, anytime, using a connected device, so generally through app, API, or IoT. And I think the real key point that I want to speak to is how our vision aligns with not only a local need, a requirement, but also something global. And that is that we believe that safety is a basic human need, and our vision is to create a world where everyone is safe. And I think with having the advantage of starting this off in South Africa, where this need is massively magnified, was a really great advantage for us. But also on the flip side, moving now that we're really starting to look at new markets with more spend or spending power, more digital adoption, it's almost feeling like the platform that we've built has got really great legs to fix this imbalanced ecosystem where in South Africa and in a lot of emerging markets, you have tons of supply, private security response resources that actually only service a tiny percentage of the population. So there's an accessibility issue, there's an affordability issue, and as a technologist, you can find a platform that marries those two, that ecosystem in a shared value concept, and that is replicable, as well as you can distribute access to that platform in a scalable way. It's looking really exciting.
And in terms of, you can maybe talk a bit more about the genesis of your company, where you started. I mean, you a few years down the line now, but your first clients, I mean.
Yeah, so like I mentioned, we're a backend provider of aggregated response, and our first client was amazingly valuable in that Uber, which is Uber. They required fast and effective security response to both their drivers and riders nationally. And what they found in South Africa was that firstly, they couldn't rely on the police, and secondly, the private security providers were very fragmented. So they would have to go and contract with dozens of companies to effectively provide national cover. And we came in as an API access click-in through the app into our platform that provided all of their stakeholders, their drivers and riders, access to on-demand security response. And I think just to parallel that thought, there's a lot of other big global platforms that actually require similar access in order to commercialize their products in the emerging markets. Uber's just one, for example. They're working with us on expanding our service offering in other territories where they can't rely on the police and have similar safety issues. But they're only one of hundreds that we've actually identified. Amazon's subsidiary Ring.com is another great example of a company we're talking to now that have brilliant business cases in first world countries where they could rely on the police. But anywhere across Latam, Africa, and parts of the Middle East, and even Asia, they need access to a national network that can provide them emergency response services. Other examples, I mean, you wouldn't even think of it like we've been speaking to Tinder. In America, Tinder launched the panic feature within their app where women were getting were uncomfortable, even getting sexually abused, and in territories like ours, they need an outlet to actually send those responses to.
That's very interesting, and we can definitely see the parallels between yourselves and Uber being that on-demand platform for a remote service. I think it's a great linking there. I mean, in terms of technology, I mean, I think Joshua Janks, as we failed to introduce you properly, he's a partner at Bowmans Law and a critical part of their VC and private equity team. You've obviously seen a lot in the South African VC scene. You know, when international investors are coming in here and looking to either acquire or one of our early high growth businesses or to join an investment round, I mean, where do they position the value of the business? Is there a lot of focus around the actual technical skills and competencies, or are they talking more about the domain knowledge, or how do you, from your experience, where do you see the key points there for an investor? And Josh is gone. Sorry, I can't ask Josh that. It's dropped off. I will. So let me get back to that one on Josh. I think, while we're on the tech and being local, Sheraan, you're Cape Town based now. You've successfully exited a business in the US. We all know that Amazon now has a significant tech footprint on your back door in Cape Town. Being very active in the community and hiring developers, has this been a benefit for South Africa? How's it changed the dynamic locally? How's it elevated us on a global scale? Maybe just some thoughts.
Well, I think that it's globalized us, Rob, meaning there's pros and cons. I think there's more pros than cons, but we've had Amazon as the largest entrant into the South African market that's hiring developers, but there's several other global companies that have entered, and South Africa has become a popular destination for international companies looking to set up a satellite office to hire developers. So what all of that's had the impact of, I've been building venture capital back companies since 2008. And I would say that since that time, specifically in the last 6 years, from 2014 until now, there's been a rapid inflation in the cost of developers and the remuneration of software developers. It's probably, at this point in time, the best profession to be in South Africa from a career security point of view and career mobility point of view. So I can't complain. I mean, I was a developer and I studied computer science, and to see the profession become so lucrative and do so well makes me very proud and happy for my peers in the industry. I think on the flip side, as an employer, it means that suddenly tech got a whole lot more expensive. Now, against global norms, if you talked about the cost of rent in Silicon Valley, we're still far cheaper. And the quality of our technology talent is exceptional. So I think that there's a lot more production of talent now than there ever was before. If I go back 15 years, you'd have a handful of developers that could, in the country, that could really be a great fit to build a tech startup that understood front-end user experience, modern technologies. And now, there's hundreds, probably thousands of developers in South Africa. And I don't think that happens in a vacuum. I think that happens because these huge engines of talent creation and talent demand have arrived. Yes, it's made it more competitive for us to hire and retain. It has become more competitive, but there's a lot more talent. So on the whole, I suppose the question would be, would I take the ecosystem today over the ecosystem of 10 years ago? Definitely, because there's just so much more talent in the country. And I don't see any slowdown in our rate of ability to keep producing this talent. So I'm very optimistic about the future, but we're going to need to continue to revise our estimates every 5 years of what developers earn. And that's common around the world. Okay.
Very interesting. Thanks, Sheraan. I think, we'll try and bring Josh in later. He seems to be on and off the call there. I think, whilst we're talking technology and the ability for, obviously Sheraan has outlined that the technology has, technology skills available in South Africa, or Southern Africa has grown. I think one of the best examples that I'm aware of is with HAVAIC, on a very particular angle, in that one of the investors that they have are quite they're based out of the US. They are backed by supported by a significant technology university. I won't mention your names, but Nic, I don't know if you want to say how you're able to take your technology and really compete on an international level and scale the business globally, and mention names if you're allowed to.
Sure, Rob. Sorry, this thing just takes some time to go off mute. So to give some context, yes, Rob. So I think we mostly have the best combination of backing in South Africa, most probably because we are a research institution spin-out, right? So we're a spin-out from Tux. So we're very deep in towards validation and research, strong footprint in the the tech space. And then we've got a cost base in the South African market, which is, much cheaper, but not just from a developer point, which Sheraan, spoke about, developing tech, but also from a support perspective. We have a strong B2C play, where we actually have, quite a lot of audiologists and call center operators, which we hire from South Africa to service the international markets. But to get back to your point about the international markets and kind of how do we attract those, I think if you speak about the kind of the local mindset of South Africans, right? I mean, we're quite innovative, and everybody speaks about, South Africans and Africans being innovative, and there's a space for that innovation. And I think we operate in a space where there's been like almost zero innovation for about the last 100 years, right? I mean, the audiology space has been charging, $5,000 hearing aids. We're selling $5,000 hearing aids for the past 100 years, and we're making, bucket loads of cash, right? I mean, that is set to change in the next 12 months, the new regulation coming out in the US. But what that has done is it made our entire ecosystem, entirely complacent. So, I mean, our founders, both professors in audiology and engineering, said, well, this needs to change, right? So they took the clinical stance, they paired that with, a strong commercial entity, which is our company. And then that automatically gave us that kind of international stance. And I think it was much more of a pull than it was a push. As much as I think any startup entrepreneur or CEO wants to have an international presence and international customers, I won't say every opportunity that came our way was due to the fact of me being amazing and chasing down those leads. But it's been a lot around having technology and kind of getting on the stage and not being shy of opening our mouths. But to get to your point around kind of the type of investors and partners we're working with. So to give some context before I answer that question, there's new regulations coming out in the US. It should have come out now in August already, but COVID pushed that out. I think the FDA has got their hands full with other priorities. And that's coming out in the first Q1 of 2021, where you'll be able to buy a hearing aid over the counter as you can buy a pair of spectacles these days, right? You can buy a pair of glasses in any pharmacy. And that's pushed the likes of, Apple is making a play for this market. Bose is, Jabra, a couple of these consumer brands which got headphone already, people walking around, tons of stuff sticking out of their ears, and we already have someone on the call already doing that. And that's changed into hearing devices, all sorts of types of amplification devices, right? But these are consumer electronic companies. They unfortunately don't know a lot about health, and specifically not audiology, which is actually a very specialized field. So what we've done is instead of just competing with these companies, we've actually made technologies available, licensed these technologies to them. And one of these companies, we can publicly disclose them, is Bose. So the lead investor in our previous investment round as well, so shareholder in our company as well, but we've also licensed very sophisticated technologies to them to allow them, to take their consumer business and also pivot into the next gold rush, which is kind of this OTC hearing aids in the US market, also globally, right? I mean, we understand these kind of trends happen in the US and then, flow over into, the other markets. So, coming back to HAVAIC, I think we've positioned our technology also to be a player, to compete head on with the likes of the Bose and the Apples, right? And we're doing, I think, a great job at it. But I think we've kind of hedged our bets to say, if our aspirations don't come off, at least we have, licensed partnerships in place with some of the big players, which kind of have the brand equity and the cash behind them, to take it to the next level. So, that's the approach that we took to kind of internationalize, the technology that we've built.
Okay, and I think Nic's being a little bit too humble there. I think the link between Bose and MIT. I mean, MIT is a small university everyone probably knows very well, and they produce obviously high quality technology graduates and have a good staff. And I mean, and Nic has managed to managed to come in and actually, get investment from Bose, which is owned by MIT. I think it's a very it's a good validation of the ability of Southern African businesses to produce quality that is competitive globally. So I think well done to Nic, and good luck, obviously. I think while we're talking on the the technology and the data, and I know you've mentioned real world problems earlier. Question for Warren from Aura. Maybe you can discuss something about the usage of data and how that really is making real life life-saving decisions using the tech, using the data. Everyone talks about data, but it's can you use it? Maybe you want to give the audience a bit of some color to that discussion.
Yeah, I mean, our stance on our product really as an on-demand reactionary service is actually that is an enabler for us to gain to build data sets. And I think in a year or two, if we're still just responding to activations coming from our clients, I'd be disappointed. We want to build a predictive model here, and that's the only way that I really believe that we can fight crime. Is for the first time ever having your first foot forward on crime and being able to proactively move your assets around to effect proactiveness, so actually prevent crimes from happening, but also make sure that your assets are close enough to effect arrests and neutralize criminals. So data is data, but then there's big data, and only our scale over the last year has started to produce tons of amazing data. How does weather affect crime? How does traffic affect crime? Days of the week, days of the month, like even those data pools that we're starting to lake together to create insights is seriously exciting. I mean, where that would take the business is, I mean, actually very similar to I mean, I always seem to reference back to Uber, but you don't wait long for an Uber, not because they've got tons of cars, it's because they've got algorithms predicting that there's a high probability of a ride, and they move their drivers around like that. So, if they can do that for taxis, there's no reason why we can't do that for emergency services. So I think the key metric that we're looking to get to is to almost halve our current response times, purely not through building supply. We've got enough supply. It's actually about being smarter with supply. And then the whole, I think a whole new commercial world opens up once you've got that data. That data becomes extremely valuable. We feel to insurance companies, where's risk, where's not risk, where's, at this stage, if a client gave us a set of lat longs for, say, a big portfolio group of shops, retail groups, we could work out very accurately what their response time is every minute of every day, 7 days a week. So it takes the guesswork out of how long it's going to take a security vehicle to get to that site. That's incredibly valuable for guys working out the risk associated to break-ins at those sites. So that's just one good example as well.
Thank you. That's very useful. I mean, that practical use of big data is quite exciting. Very, very exciting. I think, Josh, I know you've been on and off, but hopefully this is a bit stable now. So, we've heard from Nic and Warren talking quite high technology solutions, high data solutions. Obviously, they going global. We have investment from internet, large American VCs and the large South African VCs, and on the ultimate goal of any high growth business. I think Warren has dropped off again, Josh. It's not your day. I'm gonna have to just park that question for Josh and get in a bit later. But I think Ian, maybe I could jump back there. I mean, so Nic and Warren have both spoken about globalization, and how they're able to provide solutions for companies like Bose, companies like Uber, all the way from South Africa. I mean, the HAVAIC tagline is local innovation and global elevation. So what does this mean in the context of globalization as an investor?
I mean, I guess part of this webinar is around how local SMEs or startups or high growth businesses, whatever label you wish to give them, can not only survive but also thrive in this new low touch digital challenging world, I guess, and a lot of that is around one's ability to not only service your local market but also international markets, and it wouldn't be any different to kind of, let's say, most young businesses. A big aspiration would be to potentially enter to bigger markets, and there's not too many bigger markets than the likes of, say, the US or China, but kind of bringing it to a little bit of, I suppose, data points to say, well, it's one thing to aspire to want to enter these large markets. It's another thing to actually do it. So, I mean, we can only really talk about kind of the proof we have as being the proof in our pudding, which is how our companies are faring internationally. So we at HAVAIC have what we would call 13 local companies. So 13 companies with their roots in Africa. 10 of them are in South Africa. Of those 13 companies, we are servicing clients in 184 countries in the world. So if you include the Vatican and Palestine, there's only 195 countries in the world. So if you said to me, well, South African or Southern African or even other parts of African companies can't service clients internationally, I'd say, well, that's quite a strange comment, because we pretty much doing this on a daily basis. Kind of bring that data a little bit, or giving a little bit more meaning to that, and around how technology is really the secret sauce that allows these companies to enter these other markets. There's only 200 employees in these companies collectively, and they're servicing about 470,000 clients in, as I said, 184 countries. So you're looking at close to 3,000 clients, and when I say clients, these are many of them are large blue chip or tier 1 or Fortune 500 companies in international markets. Are one person is basically touching through technology about 3,000 of these clients. I mean, that's absolutely staggering by anyone's standard. And then we bring it back to, and Nick's touched on it, the competitive nature of, employing people, building technology, resourcing in South Africa. So it really is, from an investor's point of view, the smorgasbord of opportunities. So, as an investor, you exactly like when investing in property, investing in VC or in private equity is no different to property. You make your money when you make the investment. And because of the kind of competitive nature of local investments and the low cost nature of them, you don't pay this big fine for making an investment. But ultimately, because that company and HAVAIC is a great example, it's a South African business. I don't want to say it's a South African price, but certainly it is very efficient by world standards, which means it needs less capital to operate. It means it needs less investment. It's competing internationally, and it's competing and providing solutions to the likes of a Bose is a great example. So from an investor point of view, you're investing at a great price, but then you're internationalizing your exposure, and ultimately you would be looking to make an international exit, just like had you invested in, let's say, a US or Chinese-based company, from the get-go. So it's a wonderful opportunity for investors. And then, as we've said throughout the call, it's kind of, strangely enough, it's never been better because, this low-touch world we're living in has really put a spotlight and helped accelerate the use, the adoption, and almost taken out this fear of using technology to do business on a remote basis.
Thanks, Ian. I think Josh, while we've got you, I've mentioned asked you 2 questions and you've dropped off each time, so just holding some. But I think maybe talking about opportunities for investors in the region, and I'm speaking a bit about the technology that's available. I mean, you've had a career that's gone from dealing with startups, venture capital firms and funds, and then also with sales and exits of businesses. I mean, do you want to give some sort of color or some examples of where these real practical exits and returns might be coming from, and what investors can expect or have asked for?
Sure, thanks, Rob. And I suppose the irony of talking on a tech webinar and having tech problems is not lost on me. But yeah, so I've been relatively lucky over the last few years to see some very interesting deals in this space. And I mean, I think if I just look at the last 3 or 4 months, I mean, we've had some really interesting activity, both in the growth equity space and now with a few exits as well. And I think all of those will just continue to shine light on the ecosystem in South Africa and in Southern Africa as a whole, I guess. And I think the more successes we're having, and I'll touch on some of them shortly, I think the better it is for the industry as a whole. The more it will attract attention, attract investment, and just give credibility to the ecosystem. So kind of the things that I'm thinking of, we were recently involved with Luno's exit, where we acted for the acquiring party, and that was a great example of a South African founded business that did all the things that have been mentioned on this webinar. Expanded their business, looked into global markets, leveraged their business off the low cost base in South Africa, did all of those things the right way, and then were able to tap into a global market and attract a very, very credible international partner, nice exit, and really did well there. So that was a great example of something that we're involved with, and I think if I look at the experience of the investor coming in, I think it was a extremely positive experience. I think they found that the support that they got in South Africa from the service providers, and here I'm not only referring to myself and my team, but the other service providers that were involved, I think we're on par with kind of those that you get all over the world. So there really was kind of first-tier service providers, which gives credibility and gives comfort to the investors. I think then when looking at the actual company, it was professionally run. It was a well-developed company. The tech was strong. There was strong IP protections over time that helped them to develop and create value that was sustainable. And so I think all of those things kind of built into a opportunity to exit in a really positive way. If I kind of turn my head a little bit to some of the other kind of growth deals that we have done recently, I mean, again, all tech empowered businesses, but in kind of an array of different sectors. So I'm thinking of things like Valencia, which we've recently worked with on a capital raise, where again in the ed tech space, kind of a very, very strong team raising capital internationally, credible offering, and found a very credible partner and a best of breed from a global stable that invested with him and is backing the team. There are many examples of those. The companies that are on this panel today are all exceptionally strong, doing different things, whether it's security, whether it's health tech. All of these sectors I think are certainly in demand at the moment. The clients that I'm working with are all looking into these spaces. And I think there are some really exciting things happening at the moment.
Thanks, Josh, and thanks for technology for hanging in there. So we're so just heading into the last kind of 10 minutes or so of this webinar. Josh, you spoke a bit about the exit to Luna, and that's obviously very interesting. And I know we've had a few really big exits from Southern African businesses internationally. And as I said, my friend Zachariah George has invested in more businesses in our countries on this continent of ours. So Zach, I mean, you're not an impact investor. You've worked for an accelerator, and I'm sure you don't mind me asking this. You had a bit of a caveat. Zach and HAVAIC have co-invested at times, but you have some pretty good returns over time. Do you believe kind of international investors firstly would be able to get hard currency returns in Southern Africa, speaking from your own personal experience? And then what is your outlook for the future, or has that window closed?
Yeah, so I think, first of all, just for some statistics here, in the last 3 years alone, 2017, 2018, 2019, you've seen exponential growth in the amount of VC activity on the continent. So in 2019 alone, there was more than $2 billion of venture capital funding into African tech startups. And the majority of that came at the Series A, Series B, and Series C level. So there's still quite a bit of a gap at the seed space, but at the Series A level, we're right out there with our counterparts in the US and Europe and Asia. From who's actually involved in these deals, there were 250 VC funds that invested in VC in Africa last year. And interestingly enough, about a half of them are based on the continent. And that's not something that a lot of viewers would have expected. So the actual VC funds in Kenya, South Africa, Nigeria, sort of the three frontier markets, and the other half are US, Asian, and UK and European VCs. From a return perspective, I mean, just in 2020 alone, we had 5 big exits. And when I say big, anything above $100 million is classified as a big exit. And those exits came, in Southern Africa and East Africa. But the one thing I want to just mention briefly is, if as a VC fund, your sole strategy is to wait until a big exit or an IPO, you're probably going to have to wait about 7 to 10 years from an African context. And the most popular route for an exit tends to be trade sales to the likes of your Naspers or your Old Mutuals or your EcoBanks or the big banks, insurers, telcos, retailers, and media companies. But what's interesting to understand is, as the African VC ecosystem has matured, you're having more companies do Series A extension, Series B extension, Series C rounds. And at each one of these rounds, there's a lot of opportunity to take money off the table. We've seen a lot of, I'll give you a simple example, that there was a South African technology startup still around called, LifeQ. And prior to their Series A, they had 96 investors on their cap table, right? Incredible company, but a company doesn't want to have 96 investors at their Series A, let alone their Series B. So because of the maturity of the ecosystem, a lot of later stage VCs want to clear out cap tables, want to have more strategic investors on board. So a lot of VC funds are focusing on early exits. And the more mature an ecosystem, the more likely you have to create liquidity. And in the US and in Europe, there are plenty of opportunities to make returns even before a final exit. So speaking of exits, yes, there are exits, and they do happen mostly through corporate M&A and trade sales. But there are lots of earlier secondary exit opportunities that we're seeing a lot of. They just don't make the news because they don't sound as sexy as, hey, we sold to Naspers and made a 3x, but we sold to Bob and Jane and Mary and made a 20x is equally lucrative. And I think it's important for the VC industry to understand that earlier exits creates liquidity, and what happens with that liquidity? You have more investment. That's what happens in Silicon Valley. There's a lot of washing of capital that happens every 3 to 5 years, and not stagnating for 10 years, as is the case in less mature markets. And South Africa and Southern Africa is getting there.
And in terms of returns that investors can expect to see, so, they're obviously different currencies. I mean, I'm actually looking at something from PitchBook now. I mean, I think the average of the last IRRs for kind of global VCs is down 17 to 18%, returns per annum. I mean, is that what you're seeing?
Yeah. So again, obviously, as an accelerator and as an earlier stage investor, our IRRs are a lot higher than that, and it again speaks to valuation. I mean, Ian made a very good point earlier, which has been echoed by a lot of top VCs in Africa. You make money at entry, not at exit, right? If you find a really good company and you get in early enough, the average seed valuation in Africa for a tech startup tends to be between $1 and about $3 million. You have a few that'll sort of skirt around the $5 million valuation mark, but it's between $1 to $3 million. So if it's a fundamentally good company with a good route to market, that company at Series A is starting valuations at $10 million, going all the way up to $50 million. So seed funds in Africa and angel funds in Africa are looking at IRRs of 60 to 70%. Those numbers are off the charts, right? So can you make money in VC in Africa? Absolutely, but you have to take a stance relatively early on. If you're waiting to Series B or Series C to come in, your upside is limited to maybe 10 or 15% IRR, which are the numbers that you mentioned earlier. So you have to get in early, and you have to really understand your founders and what their route to market is. And as an angel and as an accelerator, our IRRs are north of 50% net. So.
Okay, well, I think that certainly is a food for thought, and hopefully makes people interested in the space. Just conscious of the hour that's now left, and obviously we could go on talking for ages about this. So I think everyone has put their website up in the right hand side. My LinkedIn profile is up there as well. So if you want to contact me, please do so. I can, if you have any other questions, we can take them offline and have contact with all the entrepreneurs and professionals on the panel, so we can reach out to them individually. So please do so. And again, thank you to Anna and Africa Global Fund for organizing this. And I think the key takeaways that we're going to hopefully take from today is that the tech skills that are available. You've seen a company like HAVAIC do exceptionally well. You people RecoMed with access to great tech skills, and the high data availability and servicing international clients that many of these and OR is a great example of that. It is available in South Africa, in Southern Africa. I think we have our professionals. We have the Ian and as an VC and Zach and certainly Josh, who's seen more than most in this ecosystem. And then the low cost base and this is a beautiful environment, and Cape Town is all very lovely. It's a great place to be, and the returns for the investors are there, and that's very much what Zach has kind of said. So that kind of wraps it all up. Pressed for time here, so sorry for rushing this, but please do, if you're interested, please feel free to reach out to any of us. Very happy to have these discussions offline and in other environments. So thanks to all our panelists for joining us this evening, afternoon or morning, wherever you may be. And yeah, be well, and we will stay in touch. Thank you very much.
Thanks, guys. Thank you, Rob.
Thanks very much.
Appreciate it.
Sure.
Cheers. Bye.
Hello.